What are you busy with recently?
As you say, we're operating in an area that's much loved right now. So busy talking about alternatives. I'm here in Hong Kong for a couple days talking to clients. All aspects of alternatives have been interesting to clients. We recently launched a infrastructure strategy that gives individual investors exposure to infrastructure assets, which is really unique and one of the first times individuals can invest in direct infrastructure. Obviously, private credit is an interesting area right now, and additionally, people want to talk about real estate. So we are busy talking to investors around the world about alternatives and why they deserve an important piece of their portfolio, in their portfolio, the same way they do for institutions.
Yeah, in fact, last year, when just about everything was doing badly, people started talking about private credit, for example. And I'm wondering, at this point in the cycle, about 6 months divorced from a bad year of 2022, if you could describe for us the appetite still, because there is that illiquidity premium that you have to sort of convince them that's fine.
Yeah. The appetite, I would say what happened in 22 and the volatility that we saw and the correlations between equity and debt have been a massive tailwind to alternatives. Obviously, what people are looking for is a little bit different than what it was, say, in 2020 or 2021, where it was this search for yield and everybody was moving to alternatives for yield. I would say they're moving to alternatives today partially for yield, but also for diversification, for lower correlation, obviously, for stability of returns, and that is what alternatives provide. So the demand is there. I think the demand is actually higher today than it was when people were using alternatives just for yield.
David, you mentioned a little bit more about real estate. Obviously, with higher rates, there's a lot of questions about, are we really feeling the full effects of tightening? But in terms of real estate investment, commercial, retail, residential, where are you seeing the most opportunities now?
Yeah. Brookfield is a opportunistic investor. We look at markets like this as a tremendous opportunity, and we're finding those opportunities across different sectors. Multifamily is really interesting. Logistics are really interesting right now. Science and innovation related sectors are interesting. Hospitality is interesting. So we're finding lots of exciting opportunities to invest in real estate right now.
Okay, are there certain markets that you find most attractive in Asia geographically?
Yeah, so we have a very, very global footprint. Brookfield manages about $850 billion, and we operate in 36 countries around the world. So we're deep in local markets everywhere, frankly. But specifically, where we're finding a lot of opportunity right now is actually the U.S. So our funds are generally global, and our strategies broadly are global. But we're finding a lot of opportunity in the U.S. We're seeing emerging opportunity in Europe, and certainly pockets of opportunity in Asia as well. But again, our footprint is very global. That's true in real estate. It's true in credit. It's true in infrastructure as well.